Welcome to the Explainer. So, Tesla's latest quarterly results are out, and honestly, they've revealed something fascinating. It's like we're looking at two completely different companies that just happen to share the same stock ticker.
So, the day after Tesla announced its Q2 2025 results, this is what happened.
The market reacted quickly and, well, pretty painfully. An 8% drop like that sends a really clear signal of concern over the company's current performance as, a car company.
And yet, on the earnings call itself, CEO Elon Musk seemed to be talking about a completely different company. He focused the entire conversation on this one thing: autonomy. It creates this puzzle for investors. So what is the real story of Tesla today?
Okay, let's dive into this. First, we're going to look at Tesla as a traditional car company. And if you just look at the numbers from their Q2 report, the picture gets pretty challenging, and it gets challenging fast. First up, total revenue. For Q2 2025, it was down 12% year over year, falling to about $22.5 billion. But what's behind that drop?
Well, it was driven by this: a 13% decline in the number of cars they actually delivered to customers. But even that doesn't quite tell the whole story.
Because when you dig into their other models, and that includes the high-end Model S and X plus the much-hyped Cybertruck, deliveries didn't just drop. They absolutely plummeted by a staggering 52%.
And to put that in perspective, in the now super competitive electric truck market, Cybertruck sales have fallen to roughly 5,000 units. It's actually trailing competitors now, like Ford's F-150 Lightning.
Now, to be fair, it's really important to note that Tesla's challenges aren't happening in a vacuum. This is part of a much bigger trend.
A recent industry report from Lazard actually coined a term for this whole mess: stagflation. It's this perfect storm, right? Sales growth is stagnating, but at the exact same time, all these companies have this urgent, incredibly costly need to pour billions into new EV and software tech. The entire industry is feeling that squeeze.
So, okay, that's story number one: Tesla, the car company. But now let's look at story number two. Because if you completely ignored those financials and only listened to Elon Musk on the earnings call, you'd think he was running a totally different business.
You can see that the company's leadership is pivoting the narrative, and they're pivoting it hard. They're basically arguing they don't really sell cars anymore. They sell sophisticated, AI-powered devices on wheels. It's all about what the software can turn the car into tomorrow.
And this whole vision is being fueled by an absolute mountain of data. Tesla's full self-driving software has now logged over 4.5 billion miles of real-world driving. And as you can see, they're expanding tests to some of the most complex cities all over the world.
And they're already starting to turn that data into actual services. A Robotaxi service is now live in Austin. And, get this, in a pretty remarkable proof of concept, a Model Y recently delivered itself to a customer driving completely on its own.
But it is crucial to look at these claims with a critical eye. Critics, like this user on Reddit, point out that Tesla's safety stats might not be an apples-to-apples comparison. See, Tesla often compares crashes where their airbag deployed to the US average of all police-reported crashes, and that difference could really skew the results.
And that is the crucial point. This is the future Musk is selling. It's not just cars. It's this fully integrated ecosystem of robotaxis, Optimus bots, AI computing, and energy solutions, all powered by Tesla. It's a much bigger vision.
So this brings us right to the core dilemma for any investor. How on earth do you value this company? You're basically being asked to buy a stock that represents two wildly different businesses at the exact same time.
On the one hand, you have the bear case. The bears are focused on the hard numbers of today: the declining sales, the shrinking market share, the industry stagflation. But on the other hand, you have the bull case. The bulls are willing to look past today's numbers because they're betting on a massive future payoff from AI, robotaxis, and Optimus robots.
And nothing shows this confusion better than Wall Street itself. I mean, look at this. The professional analysts are completely split. Their ratings are nearly a three-way tie between buy, hold, and sell. Even the experts can't seem to agree on what Tesla really is.
So where does all this leave us? What's the big takeaway here? How should we think about Tesla moving forward?
Ultimately, I think it comes down to this. Tesla today is two companies in one. You've got the physical business, the capital-intensive car and energy company that's facing some very real headwinds today. And then you've got the vision. an ambitious, almost sci-fi promise of an AI-powered future.
The entire future of this company really rests on the answer to this one question. Can that AI vision, the robotaxis and the bots, can it be realized fast enough to solve the car company's problems? The answer to that will determine whether Tesla becomes the most valuable company in the world or just another car maker facing a very, very uncertain future.